Happy Friday, 30 minutes until the start of trading with a mixed picture in futures. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the record-breaking rally in U.S. stocks remains intact. We got a whole new one yesterday, up another 2 points on the S&P. High stakes. President Trump and President Putin gear up for their first summit in 7 years. Maybe they've talked on the phone a few times since then. And President Trump could make an unprecedented move to take a stake in an American icon. Well, it is actually precedented.
Yeah.
I mean, President Obama took a lot of stakes.
Yeah,
remember?
Those were different circumstances, though.
True.
The circumstance is unprecedented. We're going to dig into that, but let's also dig into United Health because it's soaring this morning after Warren Buffett's Berkshire Hathaway disclosed a $1.6 billion stake in the health company, which is down 46% year to date. Investors clearly psyched about that pre-market. Again, shares up 10%.
Yeah, and they did a lot. I mean, Lennar and Nucor, we're going to dig into all of that. And Intel is the icon I was talking about, continues to climb on the possibility that the U.S. government will take a stake in the beleaguered chip maker and help it build its gigantic fab in Licking County, Ohio, Katie.
We'll talk about what that means for the U.S. relationship with corporate America and also what that means specifically for Intel. But let's talk about U.S. retail sales. We got those figures at 8:30 this morning. They rose in July, but they did come in a little bit softer than anticipated. Let's break it down with Michael McKee. He is Bloomberg's international economics and policy correspondent. He joins us from Jackson, Wyoming, getting an early start there. And Mike McKee, talk us through what the takeaway here is, because they did increase in July, maybe not as much as anticipated, not making much of a dent in the market right now.
Well, Katie, these are not the results you're looking for, not the droids you're looking for if you are looking for the Fed to cut interest rates. It suggests that consumers are still hanging in there. Companies can still keep selling stuff and keep raising profits. That's the good news side. The bad news side is probably not going to see any kind of a rate cut talk from the Fed in the near future. We'll see what happens when we get future inflation numbers. But you look at the retail sales, up 0.5%. Now, the thing that was really amazing is that the June numbers were revised up strongly to a 0.9 gain. And you put the two together and you have a very strong month. And the retail control numbers revised up in June to 0.8, and then a 0.3 gain this month. And you end up with another good month of consumer sales, up 0.5% in the stuff that goes into GDP. I also want to highlight import prices. Import prices up by 0.4 on a headline basis, and ex-petroleum up 0.3. Now, the argument the administration has made is that exporters are going to absorb some of the costs. This suggests that is not happening, that they raised prices last month rather than cutting prices to overcome Trump's tariffs taxes. So that is also not good news. It is a signal that maybe we will see some continued inflation in the U.S. in terms of imports, and that companies and consumers are going to be picking up more of the tab.
Well, but the numbers were strong and the revisions were to the upside. So no one at the Commerce Department is likely to get fired, right?
Probably not. The retail numbers put together by the Census Bureau, and the president has them working on other things. It's tough, though, for a president who wants interest rates cut to live with the fact that they're getting the kind of numbers that they are at the moment, because it's not encouraging the Fed to cut interest rates. Now, these are nominal. These are not inflation-adjusted retail sales. So we'll have to see what we get when we get the PCE spending numbers at the end of the month that also add in services. But right now, the economy is still chugging along through July.
All right, Mike, thanks very much. Michael McKee reporting very early in the morning from Jackson, Wyoming. He'll be there throughout the day and really throughout the week. He's going to have an awesome time. In technology, the Trump administration is in talks with Intel to have the U.S. government take a stake in the chip maker. This, according to people familiar with the plan who declined to be identified. It comes 1 week after the president said Intel's CEO should be fired over his work in China, but they met up, and now we have this news. Bloomberg's tech reporter, tech show co-host, and just all-in tech genius, Ed Ludlow, joins us now out of San Francisco. This is quite an amazing story, Ed, and Intel's a company that needs all the help in terms of capital that it can get if it wants to build this fab in Ohio, right?
It is amazing from the sort of American-backed state enterprise side of it, which we can get into. I mean, what we know from sources is that the focus of this administration is very much the Ohio project, Matt Miller of Ohio, right? And at one time, Intel vowed that this would be the biggest, greatest semiconductor manufacturing facility on Earth, but they have really pumped the brakes on it. And that is completely at odds with what this administration wants to do, which is to accelerate the re-onshoring of supply chain and semiconductor manufacturing in this country. That's the rationale. What we don't know is the size of the stake, right? I heard you and Callie talking about the precedent or lack of precedent. Of course, the administration has done this with MP materials in the rare earth space. And in that case, the US government is the single biggest shareholder. But we just don't know if that's the case here with Intel.
Well, let's talk a little bit more specifically about Intel, the beleaguered American icon here. We know that Lip-Bu-Tan, he came in March, and it seems like his game plan so far has been to cut costs, to cut jobs. It's not about necessarily restoring the technological edge. If he did get this stake from the U.S. government is going to take over trying to actually build this Ohio plant, or at least provide the funding for it. Do you think that this changes the game plan coming from the CEO office?
You know, the capital is important, and Lip-Bu-Tan, since taking on the role, has had capital discipline, right? But it's also that this administration makes things move quickly. We have seen that with NVIDIA and AMD's ability to export not just to China in the situation we discussed this week, but the Gulf as well. You know, TSMC and Samsung have accelerated their investments to ramp capacity for semiconductor manufacturing in the United States. Now, what I'm hearing in Silicon Valley is that the reason we like this plan, and the administration likes this plan, is because you cannot guarantee that Samsung and TSMC will make the United States a priority. Intel's an American company, and not just because of the financial stake, but sort of the deregulatory side and the cutting of red tape that this administration's focused on. Intel on paper is everything they've been looking for. It's just that, in the early parts of this administration, they didn't have somebody at the helm, either side of a CEO swap, that was able to do that.
Ed, I want to throw you a curveball here. When I was out earlier this week, we had the news that Perplexity was making an offer, I think $34 billion or thereabouts for Google Chrome, even though Google Chrome is not necessarily for sale. And this morning we got a headline across the terminal that Sam Altman is also interested in Google Chrome. Are we going to get something of a bidding war for an asset that's not really on the block yet?
Well, and that report came from The Verge, I think, right?
Yeah,
Correct me if I'm wrong.
That's right.
But remember, during the course of the trial and the testimony that was given by rivals of Google in the AI space, a number of companies, including OpenAI, brought up the idea that it would be possible to make an offer for Chrome and Chromium, the underlying source code, and why that would be to the benefit of the marketplace. The idea is not new, but I don't see The Verge headlines as also going as far as to say they have submitted a bid. I think it's just Sam Altman out in the media, something that Sam Altman does all the time, speaking about something that's topical in the domain of AI.
Yeah, fair enough there. I will say OpenAI probably has deeper pockets than Perplexity, so we'll have to see how this one shakes out. Ed Ludlow, really appreciate your reporting. That is Bloomberg Tech co-host Ed Ludlow. You can catch more of him at 11 a.m. Eastern. But stick with us because we're going to talk about President Trump. He's heading to Alaska to meet with Russian President Vladimir Putin as the U.S. pushes for peace in Ukraine.
I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
Bloomberg DC breaking news reporter Lauren Dezensky joins us now for more. And Lauren, set the stage here for us. What does success look like to Donald Trump, and what does success look like to Vladimir Putin?
Great question. Well, despite Donald Trump's all-caps Truth Social post this morning saying high stakes, Trump later on Air Force One said that essentially he's not here to negotiate on behalf of Ukraine. Really, Trump is emphasizing the strength of the U.S. economy, the hot U.S. market, and really saying that in order for Russia to get a piece of this hot U.S. country, they need to then agree to the ceasefire. Trump, from day one, has consistently said he wants Russia to stop its war in Ukraine. He wants the violence to stop. And not only if he secures that ceasefire will he maybe get his Nobel Peace Prize, he would also be able to then give Russia a piece of economic success. Trump has really made clear that there will be dire economic consequences if Russia doesn't play ball. We also saw Scott Bessent say this in his excellent Bloomberg interview this week, saying that it's time for Europe to put up or shut up. It's time for Europe to also back up the U.S. when we talk about sanctioning Russian oil buyers and trying to get the rest of the world in play. So a long answer to your question of essentially Trump is trying to get everyone else on the same page to then line up a possible trilateral meeting between the U.S., Russia and Ukraine. But really, we just have to wait to see what happens.
All right, Lauren, thanks very much for joining us. Bloomberg's D.C. breaking news reporter, Lauren Dzinski. We're going to continue coverage of this summit late into the night. I know Joe Matthew has brought snacks and a sleeping bag to the office, and he, of course, kicks off his first program at noon. He's on then again at 1 on Bloomberg Television. Balance of Power kicks off special coverage at 5, officially to 9. But Joe has told me he's willing to stay past midnight if need be.
Love of the game, that man. He just grinds away.
Absolutely. Coming up, what do we got?
We got Warren Buffett's Berkshire Hathaway betting on a rebound in United Health. We'll discuss all of the 13F takeaways next. This is Open Interest.
13Fs.
Ooh.
Sell it. Let's get now to high interest. Look at what's making headlines around the world. SanDisk delivering disappointing results. EPS and gross margins fell short of expectations due to higher operating expenses. Remember, they used to make the cards that you put into your camera before your camera was on your phone. Circle looking to capitalize on continuing investor demand, announcing plans to offer 10 million shares in a secondary stock sale priced at $130 a piece. That's more than 4 times the price of its IPO back in June. So it wants to take some of that money off the table. The shares not moving much today. Warren Buffett's Berkshire Hathaway making a ton of news in its 13F filings. The big headline was the fact that they took a $1.6 billion stake in United Health and UMich. According to the regulatory filing, Berkshire bought 5 million shares of the health insurer in the last quarter. Can we say beleaguered health insurer?
Yeah, I use that for Intel, but I think you can use it for United Health as well. Down 46% year to date through yesterday's close. Let's talk a little bit more about Berkshire's moves. We're joined by Christina Aquino. She is Bloomberg's managing editor for Markets Live. This was exciting. Matt and I were anchoring the close last night when this headline crossed, and the reaction in after-hour shares was immediate when it comes to United Health. What do we know about this stake?
Yeah, absolutely, Katie. I mean, I guess it is a little bit of a surprise given just how beleaguered, as Matt says, that United Health stock has been over the past year. And, you know, what's clear from Berkshire's move here is that it probably is seeing value in the shares at the moment. I mean, we have seen that stock price really take a dive over the past year. We know the idiosyncratic issues that United Health has faced. It had a big management shakeup over the last few months. And then, of course, it was in the eye of a storm when it comes to changes in health policy that would potentially lead to higher Medicare costs. But what we're seeing from Berkshire's move is clearly that they are seeing a little bit more of a return to stability. Because, you know, before the past year, United Health has not missed an earnings season or earnings estimate for more than 10 years. You know, the last one that they had was their first miss in more than a decade. And so, you know, it is normally a blue chip, stable stock that does deliver that sort of long-term return that that Berkshire Hathaway typically likes, and perhaps now they're betting that that's going to become a thing once again after some turmoil in the past year.
It's not all about, I mean, there's a ton of Berkshire Hathaway news, Christine, and Lennar and Nucor, fascinating stuff. But David Tepper's Appaloosa had gone so heavy into China, and now it looks like they're coming back out. What's the story there?
Yeah, that's very interesting as well, Matt. I mean, I suppose you could see as well the moves in Tepper's hedge fund there. A lot of those companies that they're pulling back from very much geared towards Chinese consumer demand. And we have seen some improvement there given the support from the central bank. They've done a lot to really just shore up sentiment, but it's still very, very shaky at the moment. And then, of course, you can also peel back a little bit from the consumer level to the more macro level. A lot of risks related to China, of course, when it comes to trade with the U.S., for instance, there is that overhang of geopolitical risk there. And so it would make a lot of sense for a hedge fund to kind of take a look at their Chinese holdings. They have a lot previously, and a little bit of pullback here just makes sense, just given the way that the geopolitical and consumer winds are blowing at the moment.
All right, Christine, appreciate the roundup there. That is Bloomberg's Christine Aquino. I want to take a look at UMich one more time. Absolutely soaring pre-market. It wasn't just Berkshire Hathaway. It was David Tepper, as we were just talking about, taking a stake in UMich. And it makes sense. If you're, a big money manager and you're looking for a bargain, UMich obviously represented as such.
Well, I mean, maybe the price came down for a good reason.
That's
right?
true.
So, but you're definitely right in that Tepper saw the same thing as Warren Buffett, right? He bought 2.3 million shares. Buffett bought 5. It is one of those companies, and I was thinking about this morning as well, that just got beaten down in a market that's done so well since the bottom in April. So I guess if you're searching for big companies that have had 40% declines.
Well, when it comes to the reason that it came down, this wasn't just UMich. I mean, it was the entire insurance industry basically not anticipating that Americans would use the medical care at the rate that they did when they set their premiums. So a lot of these big insurers were miscalculating insurance costs. You saw that really take a bite out of the whole industry, especially UMich. But now Berkshire Hathaway and David Tepper coming in. Let's take a quick check on futures right now. We're just over 10 minutes away from that opening bell. The S&P 500 pretty quiet right now. It's been a good week overall, but you can see that the S&P 500 only higher by about 0.1% right now. The Nasdaq 100 about 0.1% lower. The small caps shining this morning, at least on a relative basis. The Russell 2000 up 0.2%.
They could have bought Centene.
They could have bought Centene.
Centene is another insurer that lost 55% of its value this year to date. Coming up, Callie Cox joins us. She says any sign of progress can be monumental for the stock market when both Wall Street and everyday investors are braced for the worst. We'll discuss that with her among so many other things. This is Open Interest.
Bank of America says that U.S. stocks will decline if Fed Chair Jerome Powell gives dovish signals in Jackson Hole next week. The team, led by Michael Hartnett, says that any dovish tone could trigger a buy rumor, sell fact trade. Hartnett reiterated a preference for international equities over U.S. peers. Let's keep the conversation going with Ritholtz Wealth Management Chief Market Strategist Callie Cox. Callie, great to see you on this Friday. Let's focus on Jackson Hole. Do you agree with that logic coming from the team over at Bank of America?
I think dovish signals could definitely be confusing. And I think as of now, the market would take them well. But if we actually get them, if they actually happen, then I do think that the market could second guess itself around where the economy is. We saw how the market reacted during the last jobs report. Slowing growth and a job market on edge is not a good situation for markets. So to really, verify that through the mouth of Powell would be bad news, most likely.
Doesn't it look like, we had the big jump in PPI, producer inflation, yesterday, and today we had U.S. retail sales. Joe Brusuelas, one of my favorite economists, writes in to say that retail sales, import prices, and the Fed, the totality of the morning data strongly imply a rate cut at the current time is not a done deal. So not even 50 basis points is in play, but what about 25?
I think 25 is in play. I think markets are probably right to expect some version of a cut in September. I do think it'll be tricky. We all saw the CPI and PPI data reports that we got this week. Services inflation is picking up. That's a side of inflation that the Fed cares about and that they can't really hand wave away. So I don't think a rate cut is as much of a lock as markets expect it to be, but I wouldn't be surprised if we got it, especially because the job market needs it.
The job market needs it. So let's talk about that, the two different sides of the mandate that the Fed is dealing with right now, because which is the more urgent one when we're talking about September and beyond, Callie?
I'd argue the job market is the more urgent one. You can't really have an inflation crisis unless you have the job market contributing to inflationary pressures. And Powell has said himself many times that that's not happening. You can see that in the data as well. There is a slightly higher risk that could happen because the labor supply is stalling. There could be a skill mismatch that could lead to higher wages. But we haven't seen much evidence of that yet. And, you know, if I had my way with rate cuts, I would look toward the job market, potentially jump in and save it. But I understand why it's tricky right now.
All right, Callie, we are just getting started. You're sticking with us through the opening bells. Here's the setup right now as we count down. About 4 minutes to go. You can see it's quiet. The S&P 500 pretty much unchanged in the pre-market trade. We know that the index is higher by about 1.4% on the week. We'll see if that holds. The NASDAQ 100 down a touch right now, off about 0.2%. The Russell 2000 is still the relative leader, but that's really not saying much on this Friday morning. Pretty much unchanged. The open is up next. Don't go anywhere. This is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are very little changed today. S&P futures up about 0.1%. This after we put in a new record close yesterday. I think 64.68. We climbed about 2 points in yesterday's session for a new record on the S&P 500. NASDAQ futures have a red arrow, but nothing going there. Russell futures also doing not a lot. This is a day on which I believe the president could really move markets, or definitely individual stocks, right? He's on Air Force One. They've got a 7 or 8 hour flight to Alaska where he's going to meet with President Putin. He could say anything about Intel. He could say anything more about chips tariffs. He could say something about the deal he gets. He could get a deal. He could not get a deal. So we're watching well into the night. Joe Matthew is going to be anchoring Balance of Power until like midnight tonight. So today we could see swings at any point, but right now we see not a lot going on, with the exception of the 13 Fs, which normally that's a yawn, but Today
it's very exciting. And I will say you're not seeing much at the index level, sure, but at the individual company level, things get a little bit exciting. And we start with United Health soaring after Warren Buffett's Berkshire Hathaway disclosed a $1.6 billion stake in this insurance company. You also had David Tepper's Appaloosa buying a stake in United Health. Remember, shares through yesterday's close had been down more than 40% year to date. We know that insurers have been hit hard by miscalculating medical costs. So clearly someone saw a bargain here, and you see investors following their lead, in United Health shares up about 10% at the opening bell, Matt.
Just checking on Centene right now to see what they're doing
beleaguered
at the open.
Insurer.
If you don't know, Centene is also an insurer, actually
Yeah.
up 4% right now. Intel continues to climb on the possibility the U.S. government will take a stake in the company after it did so with MP. Kind of taking a page out of the Obama playbook, although the economic backdrop is incredibly different, and in that case it was car makers and banks. But it looks like, at least according to people familiar with this story, this is a plan that's in the works. And that's not the only chip news, right? Because we had AMAT earnings out yesterday, Applied Materials coming out with beats in the quarter, but a disappointing outlook. That's going to be weighing on, I'm going to say, AMAT shares. I'll go ahead and check them.
14%, biggest drop since March 2020.
Wow.
That was not a good time.
That's a heavy weight on the chips. We're back with Ritholtz Wealth Management Chief Market Strategist Callie Cox. And Callie, you know, already on Air Force One, the president has said he could put chip tariffs into place in the next week. He's threatened 100% chip tariffs, although if you build something and you're a giant company in America investing a ton, you can get a carve-out for that. He could make news all day long that will move these stocks. How do you deal as an investment strategist in this kind of atmosphere?
Well, I'm lucky. I have an easy job. I can ignore 90% of headlines. I don't think semiconductor tariffs are the type of headlines you can ignore for long, because tech is the profitability golden child of the market, and semiconductors are a big reason for that. But right now, it's just back and forth. I'm waiting for something to actually be implemented here. Of course, we did get the kickback news, I believe, for semiconductors that conduct business in China. So it's all about seeing what actually comes to fruition.
Are we calling them kickbacks officially? I was wondering if someone was going to come out with that. So this is like an export tax, right, on NVIDIA and AMD. If they want to sell into China, they have to pay 15% to the United States of America. That's a pretty bold statement, though, calling them kickbacks.
Okay, kickbacks are not the right word. That's my Friday morning brain speaking.
Yeah, I would say that's a legal
right,
phrase. I wouldn't want to use that right now either. I'm going to have to go ahead and push back against that.
They're export taxes. They're export taxes, correct. But it's still something to think about, right? The market has put a lot of weight into these semiconductor companies. China is the third biggest market for NVIDIA. I mean, the semiconductor darling of the market. If you are concerned about corporate America and where earnings are headed, then you should be concerned here, because tech far and away has been the driver of margin growth.
And Callie, I was thinking about this earlier today. I mean, you think about what's going on with Intel, the possibility of the U.S. government taking a stake. You think about the stake that the U.S. government took in MP Materials, which Matt brought up. I mean, could you build a trading strategy, maybe not an investing strategy, but a trading strategy of just buying shares of companies that seem important to national security as defined by the Trump administration and just waiting?
I think people have done that before, and that's not a comment on the administration. It's something we wouldn't do at Ritholtz, just because our investment philosophy is so far different than the short-term strategy you're talking about. But something to remember is when the government gets involved in the industry, PEs come down. That becomes a public-private entity. And I think we've seen that in banks, maybe not recently, but definitely after the global financial crisis. So something to keep in mind, especially as we see the government's fingerprints in semiconductor companies. This could be a really interesting change, given that these are known as high-flying stocks in the market.
I will say that now that I've voiced that out into the atmosphere, you definitely have some intrepid ETF issuer working on that strategy right now. Callie, great to get some time with you.
I'd imagine so.
Have a wonderful weekend when you get there. That is Ritholtz Wealth Management's Callie Cox. Meanwhile, we're just about 5 minutes into this Friday trading morning. Let's take a look at the stock market right now and the breakdown on the S&P 500, because it's quiet just at the headline index level. It gets a little bit more interesting when you take a look at the different components. You have more than 300 names in the green right now, and then you take a look at what is at the top. It's United Health, as you might expect, up about 10% right now. That is your biggest points contributor to the index. Amazon also higher this morning. Apple, Alphabet, Meta. Looks pretty good. Again, you have a lot of the names that should be rallying, bringing up this index. But then you take a look at the downside. It is no help at all that you have NVIDIA shares down 0.6%. That's not very much, but when you consider how big NVIDIA is, certainly weighing on the index. Applied Materials, as Matt mentioned, reported last night, not being received too well. That company down about 12% in the early trade. Broadcom and Palantir down as well. So pretty good breadth, Matt. Not necessarily adding up to huge gains. The S&P 500 just about unchanged at this moment.
All right, we'll keep watching at the index level for movement, but we could see that driven by the president. The Trump administration, as you have said, as we have been talking about, is mulling a stake in Intel. It's considering buying a stake in the chip maker. It comes 1 week after the president said Intel CEO should quit over his work in China. But they met up in the White House, and that meeting seems to have gone well. Bloomberg Tech co-host Caroline Hyde joins us now. So, Caroline, this is, I think, very interesting in that maybe the president sees this as a sector that needs some support, and so he's going to use the federal government to do that.
And whether or not this actually solves the overall arcing issue for Intel, which is it doesn't have as good at chips. as TSMC does, and other rivals. They've actually hinted at in their earnings a couple of weeks ago that they might even back off creating the most sophisticated leading-edge nodes, this 14A and beyond, because they didn't have the customers. Is this in some way the US government trying to hint at Qualcomm and other people who would buy ultimately from Intel to buy their chips, because we're going to start taking a step forward in terms of taking a stake in this company? What it means for the competition, that's the key question here. But I think it also all relies upon Ohio. And of course, we know that there's someone relatively senior in power who used to be a senator of Ohio who really wants this fabrication giant, the idea that you're going to get the biggest ever chip manufacturing space in the world being built in Ohio using taxpayer money with, of course, the CHIPS Act. Well, that's been backed off till the 2030s. That's what we heard from the CEO, Lip-Bu Tan, in the previous earnings. So is this just a way of trying to get Intel back manufacturing, making it in America to really help the end case for the US government, which is build here and not have to depend so much on the Asian giants that are coming over?
Yeah, this is just fascinating, too. When you consider the timeline, how quickly the relationship between the CEO of Intel, Lip-Bu Tan, and President Trump evolved, because this time last week or the day before, time is a flat circle, we were talking about the president calling for the CEO of Intel to resign, and all it took was one meeting.
All it took was one meeting. We anticipate yet another one where he's
going to be... Well, that we know about, right?
Yeah,
I mean, it could be that they were on the phone a lot, that his advisors were on the phone with Tan's advisors. Maybe the White House was pushing Intel towards this, and Lip-Bu Tan was pushing against that, and that's why he got... I mean, we don't know everything that happened behind the scenes.
The possibility is endless, but in any case...
I mean, it is mere speculation as to how much and how deep the conversations have gone, but we do anticipate there's going to be yet further discussions between Lip-Bu Tan and members of the cabinet. Many analysts have said that is a good sign that they're bringing them in and getting advisory. You're getting Jordan Klein over at Mizuho, who's going to be joining the show a little bit later, really talking about ultimately what makes them... The market reaction here is because a lot of the market kind of wants to short some of these names. Intel is spiking 10% over the last couple of days because many people have just been betting against it. Suddenly, when you get signals such as this, how long term is it, and how much can it actually rectify the issue that it needs to develop the most innovative chips? And thus far, you can't maybe do that with a government stake. What you need is the talent. What you need is the reaffirmation that you're actually going to get buyers of the latest innovations and development. Maybe that's what they're trying to signal here.
All right, it's so fascinating. I want to just quickly ask you about AMAT. Yeah, because Applied Materials getting hit so hard.
Yeah, and a maker of chip equipment, which ultimately is actually in on the US manufacturing side of things. They've been saying they're going to be helping Apple with the manufacturing here in the United States and indeed Texas Instruments. But China is the issue here. Think Lam Research, think of AMAT as well. They have about 80% of their revenue goes abroad, outside of the United States. About a third of that comes from China. China is not investing in chip-making equipment at the pace that they have been over the last couple of years. And so the CEO is trying to signal here, look, that pace is going to rectify, it's going to normalize. But for the likes of Lam Research, they're still posting, guidance of 25% growth in the next quarter. Whereas for Applied Materials, it's going to slow, if not go negative.
I do want to point out that if you take a look at the year-to-date chart of Applied Materials, we know that this is their biggest intraday decline since March 2020, at least at one point, pretty much wiping out their 2025 gains today. You can see they're just about flat on the year. That has to hurt.
Yeah, taking them down to nothing. Caroline Hyde, thank you very much. Really looking forward to your program. Today, Bloomberg Tech kicks off at 11 o'clock, and there's a lot of news for them to cover. There's a lot of news for us to cover out of Monterey because it's car week there, and coming up, Frank-Steffen Walliser, the new CEO of Bentley Motors, is going to join us live from the Quail. This is Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Bank of America downgrading Target to underperform, expecting competitive threats from Walmart and Amazon will start eating into sales. Next up, we have D.A. Davidson upgrading Salesforce to neutral, seeing limited downside after underperforming its peers over the last 3 months. And finally, we have HSBC downgrading Cisco to hold, saying that shares now appear to be fairly valued after delivering a disappointing outlook. Shares currently off about 2.6%. Remember, Cisco shares went splunk after earnings this week, Matt.
Yeah, absolutely fascinating story, especially considering Cisco's history with the dot-com bubble burst, and now we're into the AI maybe bubble, maybe not. Let's turn to the auto sector right now. It has had well, a difficult year with all of the uncertainty around tariffs, right? On both a national and a sector level, it's brought forward demand, and we saw that in retail sales, but maybe worsened the longer-term outlook, depending on where you make your cars. Monterey Car Week is underway in California. All of the manufacturers gathering there. Yesterday, we spoke to Mecum Auctions CEO Dave Majors about the appetite.
The S&P, the NASDAQ, I think, the Dow may be set to set a new record over 45,000. Gold has retreated $100 an ounce. All of that would say we're either getting more comfortable with the turmoil or we believe the turmoil's over. But at any rate, I think the financial anxiety that we've seen since March in the collector car market has subsided somewhat.
We're going to stay in Monterey and bring in Frank-Steffen Walliser, Bentley Motors chairman and CEO. He joins us from the Quail. And Frank, great to have you. Before we get to the turmoil, the tariffs, the wealth effect, I want to talk about that orange Bentayga next to you. Is that the new Bentayga Speed? And what kind of demand do you expect?
Yes, exactly. That's the Bentayga Speed. So good morning from Monterey. That's our latest version of the Bentayga, an ICE-only engine, 650 horses. Showed it just a couple of weeks ago in Montana. Very, very good feedback from media so far. Customers too early, they will get in the car beginning of next year, end of this year, maybe the first. But we see it's a car that really is asked for by the markets.
We've seen, the markets are on fire, right? If you look at equities, if you look at Bitcoin, the wealth effect must be strong, and the pull forward effect has been great as well. What kind of demand are you seeing from customers?
Well, it's different in different parts of the world. US is kind of stabilizing, I would say. It's too early to really judge it, because it's always long term. You have seasonality inside. You have, depending for sure, also on what you offer in cars. Bentayga Speed will definitely give a momentum on the sales, what we expect. New Continental coming now with the high power, not the ultra high power version. And this is very, very well received in the market. So we expect by shipping the cars in the third quarter also another momentum for our sales figures.
For the most part, Bentleys can only be produced in Crewe, right? If you're buying a Bentley, you're basically buying a piece of that factory, that craftsmanship, those artisans is what you're paying the premium for. So there's no way you can really move production anywhere else, is there?
No, and it's also, for sure, it's not intended, because part of the excitement is you have a British car, and the British car has to come from the UK. It's like a Swiss watch. Very, very clear. And but with the agreement between UK and US, I feel we are in a very good position. We have approximately 7.5% higher tariff than it was before. So we don't expect that has a big impact on our business. In the business in general, it's more the uncertainty, I would say, because also we did not raise any prices so far. Nothing is adjusted. So we expect just business going on.
So exactly. The UK has a special deal with the US on auto exports, a flat 10% tariff. It used to be 2.5%. You haven't raised prices, you say. Have you been able to take some price from your suppliers? Have you been able to get some padding there?
No, at the moment it's all too early, because we have carefully really watched the markets, what's happening there, what's happening on the pricing side. Supply is then different, but no, we did not take any action there.
I'm curious, Frank, if customers are waiting for new generations of cars that come from you. You have, personally a great history out of Germany, out of Stuttgart, and there's pretty high expectations for what you can do with this brand. A lot of the vehicles you're selling are fantastic cars, obviously, really works of art and engineering masterpieces. But do you see anybody waiting for the first Walliser cars to come out of Bentley?
If you want to call it like that, yes, people are already asking and waiting for it, and I have to ask for a little bit of more patience, but it's on the way. The first car will come, and we're already talking with customers, not with media, but with customers. We are talking about some ideas we have and projects we have started, and there's a lot of excitement, I can tell you. Very, very positive feedback.
I know you're there with my good friend Hannah Elliott. She's my co-host on our podcast, Bloomberg Hot Pursuit. And she and I recently went to Le Mans. It was exciting, and a lot more manufacturers are getting involved, not just in world endurance car racing, but in motorsport in general. It's become really important, I think, to the car buying public, especially at the level where you're playing. Does Bentley have any aspirations to get involved, to get back into, you know, especially the Le Mans series? Is I think of Bentley when I think of that series.
Well, Bentley has in general a very wide and very long history, especially with Le Mans. More than 100 years involved there, many famous victories back in the 20s, but then also the famous victory in 2003 when the brand was kind of relaunched and got more established by itself, split with the siblings. So there's a rich heritage, and for sure motorsport always played an important role in it. And as you say, more and more car manufacturers are entering, and motorsport is a very important part also of the brand image of a company, and that fits for sure also to Bentley. On the other hand, we have to make business decisions. It's all about also timing, to get the right timing to enter motorsport, because it's also clear if you have 15 brands going to Le Mans, you are number 16, you share everything with 15 others. So when is the right timing, when is the right technology, and also you need serious money to race in Le Mans. And this equation has to be solved, and then we will see. We have no plans for the moment, but it's not that we say no, we would never talk on something like that.
All right, well, we look forward to it, Frank, and I hope you have a fantastic weekend at Monterey Car Week at the Quail now, and Pebble Beach leader Frank-Steffen Walliser, Bentley Motors chairman and CEO. Don't miss, by the way, our interview here on Open Interest coming up with Lamborghini. We have the chairman and CEO of the sports car maker, of the supercar, hypercar maker coming up, Stephan Winkelmann. That's at 10:30 a.m. Eastern. And did I mention my podcast with Hannah Elliott?
You know, a few times, especially over the last 24 hours, I feel like.
Well, because it's Car Week, right? Everybody is excited, me especially, and Hannah, about all of the things that are going on there. Hannah is, of course, at the Quail right now. She's going to be at Pebble Beach this weekend, and she and I have a very special guest on our podcast, Hot Pursuit. We're going to talk today with Mate Rimac, the electric hypercar maker and former CEO of Bugatti.
And when does that come out?
That comes out at 3 o'clock today. So it's a weekly podcast. It's our weekly bi-coastal podcast for car lovers. Hot Pursuit.
Looking forward to that. I believe we have some breaking news here coming that the Trump administration is said to eye the CHIPS Act fund for its Intel stake. Remember, this is a story that we've been following closely. That breaking news yesterday that the Trump administration is considering taking a stake in Intel. Now we're getting a little bit more detail here. Again, that breaking news that now that the Trump administration is said to eye the CHIPS Act fund for its Intel stake.
So it's going to take that money, and it's going to use that money to buy a stake in Intel, or at least some of that money. That is the idea.
To be the details that we are getting right now. Intel shares currently up just about 2% pre-market. I believe, are connecting live with Bloomberg Tech co-host Ed Ludlow joining us right now. So, Ed, this headline just came out. A little bit more details about how this would actually work, this U.S. stake in Intel. What do we know so far?
So sources are saying that it is the CHIPS Act funds that are considering being used by the US government for the stake in Intel. We're also learning that it was discussed in that meeting between President Trump and Ritholtz earlier this week. The number that Intel was awarded in grants and direct funding, which was finalized in November of 2024, was $7.86 billion. It makes Intel, on paper, one of the great beneficiaries of the CHIPS Act. But as you guys know, that was in doubt, depending on what the administration would do. But we don't know if the Trump administration will use all of that money or some of it. So we don't have a sense of size of this stake. The main point, and look at Intel shares up 2% off the highs of pre-market and earlier. This is just being seen as a good thing.
Yeah, it does seem like, look, Intel is part of the growing theme of the Trump administration sort of produce here and secure this country, right? It's a national security issue more than anything else. At least that's how the administration views it.
All that matters, like put the money in the size to one side, we don't know. The administration wants very quickly to bring more semiconductor manufacturing to the United States. Intel had intended to grow that in Ohio, Arizona, and in Oregon. But it's the political support, right? There's plenty of evidence with other chip companies, NVIDIA and AMD, and their exports being one, that this administration is willing to let companies move fast and deregulate in order for them to do that. In fact, it's the central pillar of their AI strategy.
All right. It is fascinating news, and we're going to continue to cover it for you. Ed, I know your show kicks off in 1 hour and 4 minutes time. So Bloomberg's Ed Ludlow there going off to co-host his tech program. Coming up the next hour, Joanne joins us from the University of Michigan on consumer sentiment. And Terry Haines will talk more to us about the potential for the U.S. to take a stake in Intel. We are 30 minutes into the trading session today, looking at red arrows here across the board and getting some breaking news on economic data. Katie Greifeld, what do you see?
Well, unfortunately, we have to wait 10 seconds because that data comes out at 10 a.m. But right now, I see a stock market that's looking a little bit uninspired on this Friday morning. Maybe we'll see some life come back into this market when we go through this breaking data. Let's go through it.
No bueno.
Right now, University of Michigan sentiment figures, preliminary August numbers coming in at 58.6. That is a decrease from the prior read, which was 61.7. Current conditions also coming down, coming in at 60.9. The prior read was for 68 even. Let's take a look at the inflation expectations. This is where it gets interesting. 1 year inflation expectations, 4.9%. The prior figure was 4.5%. So inflation expectations coming up on a short-term basis and on
Can
a
I just say, let's get out to Michael McKee right now,
Yeah.
our international economics and policy correspondent. He's in Jackson Hole, but Mike, on every single measure that I see on my terminal, we've seen a decrease from the previous month's reading and a miss from the expectation, except for inflation. That's an increase from the prior month's reading and higher than the expectation. So all bad.
Well, remember, Matt, that these are surveys of consumers, and they're based heavily on what consumers think. First of all, they're seeing in things like gasoline prices, and then second, what they're hearing in the news. And the news has not been good about the economy in recent weeks. We've seen the very bad jobs report. We've seen inflation rising in consumer prices, plus all of the questions about tariffs and the president coming back with his big tariff levels. So it's bound to have an effect worse than people anticipated, however. And it's the inflation numbers that are going to worry the Fed because, of course, they're concerned about whether or not inflation expectations are anchored. The month change isn't going to make a big difference because we did see expectations drop in June and July, but now we're seeing expectations go back up again, apparently now that the president has put his reciprocal tariffs in place. And 4.9% is a 4/10 jump from the month before. And the Fed doesn't like something like that. You couple that with import prices today that were up and decent consumer spending. Right now, I would say that it's maybe a 50-50 chance that we get a rate cut in September. Now, a lot of data between now and then, but it's not necessarily a sure thing.
All right, Mike, thanks so much for joining us. Michael McKee giving us a run through on that data. We're going to go right now straight to the source. Joanne Shu joins us, University of Michigan's director of the surveys of consumers. And Joanne, it does look like it's getting worse. The picture is getting worse, both in terms of confidence and in terms of inflation expectations. Am I reading that correctly?
That's right. Overall, consumer views have worsened over the last month and have partially reversed some of the improvements that we had seen in June and July. Overall, consumers are seeing a worsening outlook for unemployment, for inflation. A lot of this is being driven by what they're seeing around them in terms of high prices right now. We had a pretty large increase in the share of people who were worried about high prices for durable goods as well as their personal finances. And so consumers don't really see a bright future going forward.
Let's talk a little bit more directly about inflation expectations, because that definitely is catching attention right now. The S&P 500, for example, at session lows. So both the medium term, the short term, and the longer term in increase from the prior read here, Joanne.
That's right. We saw an increase in both short and long run inflation expectations that stopped a multiple month streak of receding inflation expectations that we had seen in recent months. So that's certainly not the direction that policymakers want to see. A large part of this is likely the tariff developments that we saw in recent weeks. After quieting down and moderating a bit from the rhetoric in April with the so-called reciprocal tariffs, there's been a re-escalation of tariff developments, and that's certainly something that makes consumers worry about prices and inflation.
In terms of the split along party lines, I know for a while, Joanne, that was very strong. So Republicans expected no inflation and Democrats expected all the inflation. Is that still the case, or has it lessened?
Broadly speaking, we continue to see partisan differences in how people view the economy and view inflation. But that being said, over the last few months, both Democrats and Republicans have sort of moderated their views from earlier this year when Democrats were really expecting a worst case scenario for inflation, and Republicans were actually expecting zero inflation or even lower. Since then, Democrats have come down in their inflation expectations, Republicans have come up. But by and large, this increase in inflation expectations we saw this month, it was across demographic groups and across political affiliation as well.
Let's talk a little bit about how these sentiment surveys often inform how people are going to act, because a separate report from the University of Michigan today shows a 58% of consumers planning to cut back on spending here. It's also just interesting to see that, you know, for so long during the pandemic, you had these sentiment figures coming in very grim, I think it's safe to say, and you didn't see consumers actually pull back. Here, at least, it seems that the majority of them do plan to cut on some level.
So what's really interesting is that there are a couple key differences between what we were seeing with the historic low sentiment that we saw in 2022 and now. Back in 2022, even though people were feeling, historically terribly about the economy, labor markets were strong, incomes were strong, and that we actually saw that in the survey questions that we have specifically about those topics. In contrast, now, consumers, over 60% of consumers are expecting unemployment rates to rise, and that's almost double, pretty much double what we were seeing just last year. So even though they feel they didn't really, they continue to spend despite the fact that they had low sentiment 3 years ago, they had the money to do so. They had the incomes to do so. And right now, they just don't have the confidence in their incomes going forward. So it's hard to see how the robust spending that we saw in the last few years can be sustained going forward.
Joanne, how closely will the consumers that you survey be following the Fed debate, the rate debate at the Fed or at the White House? And if we do get cuts, how much does the consumer factor that into confidence and inflation expectations?
Overall, consumers are generally not paying very close attention to specific data prints or specific FOMC announcements. However, we do have a question on where people think interest rates are going, not the federal funds rate, but interest rates generally. And we increasingly have people, expecting a rate cut. It's an increase that we've seen over the last few months. And in particular, that's something that also has a very large partisan gap, a much larger partisan gap this year than we've seen ever before, actually. Which is not the case for other measures. Those partisan gaps have been fairly fixed. So we have a lot of Republicans who are expecting interest rates to fall, whereas less so for Democrats and with independents in the middle, not really expecting a rate cut. And so there's some preliminary evidence that the public rhetoric about rate cuts might be seeping through to the common consumer. But in general, they're not really paying attention to specific data prints and specific policy announcements on monetary policy.
All right, Joanne, really appreciate your time. That is Joanne Shu of the University of Michigan walking us through those breaking figures we got at the top of the hour. Sentiment coming in below expectations on the survey level, but inflation expectations coming in higher than the prior reading. Not a great mix, and you can see that reflected in the S&P 500. Now, coming up, the Trump administration looking to take a stake in corporate America. And we just learned that the administration is considering using CHIPS Act money to fund that Intel deal. We'll discuss with Terry Haines of Pangaea Policy. Plus, President Trump and Vladimir Putin preparing to meet face to face. What to expect next? This is Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. Warren Buffett's Berkshire Hathaway took a $1.6 billion stake in United Health. According to a regulatory filing called a 13F, Berkshire bought 5 million shares of the health insurer in the last quarter, and David Tepper's Appaloosa Management also invested. I think Appaloosa took 2.3 million shares according to its 13F. Applied Materials delivered a disappointing sales and profit forecast, citing China concerns. The company seeing weak demand in the country and facing delays in approval for exporting tech there, and that's why the shares at one point fell the most that they had since March of 2020. That was the beginning of the COVID pandemic. Trump and his administration are considering using the CHIPS Act money from Biden to fund a possible Intel stake deal. Sources telling us here at Bloomberg that discussions are in the early stages, but the funding could at least partially finance a government stake in Intel, and that would help build a $30 billion chip fab in Licking County, Ohio, which is the best county in all of Ohio.
All right, for more on that potential deal between the U.S. government and Intel, we're joined now by Pangaea Policy founder Terry Haines. So, Terry, looking at the market reaction, there were a lot of folks who seemed surprised by this news that we got yesterday. But taking a look at the notes that you sent over to our producers, you weren't necessarily surprised.
Hi, good morning, Katie. I'm frankly surprised anybody in markets is surprised. I am.
I hope you were an investor.
Well, the Trump administration couldn't have been clearer from the beginning. Besson's been saying for months that U.S. economic security is national security, vice versa. It's been very clear that geopolitics and the urgency to deal with geopolitical matters has been driving a lot of the Trump administration economic policy, including reshoring manufacturing of in critical goods, for example. And they've, from U.S. Steel to NVIDIA and beyond, the rare earth steels, it's been very clear that if the markets aren't snapping to fast enough, the Trump administration is more than prepared to step in. And that's what's being discussed today, apparently.
So is this all about national security then? I mean, our MLive correspondent Michael Ball is saying, like, the jawboning of the Fed to try and get rates down, the CapEx parts of one big, beautiful bill, things like an Intel stake or a stake in MP Materials is all about getting the U.S. on or getting us to the ability of being on a wartime footing without supply chain vulnerabilities. Is that the idea?
That's the idea. I've been writing that for I think almost a year, as a matter of fact. So that's the short answer. The medium answer is that I was saying that the defense industrial base was going to be a huge topic of interest in Washington, and a huge topic of doing something about in Washington since last September, regardless of who was president. And that's where we are today, because frankly, we're not ready to fight a long war. Everybody in Washington knows this. It's not like it's a secret. But everything you just mentioned has a significant national security component to it, including the interest rates. Yes, because whether you're talking about right-sizing trade, whether you're talking about lowering taxes, manufacturing, reshoring, what the Trump administration calls energy dominance, even deregulation, and even interest rates, all this is about making the United States economy as strong as it can be. And you can agree or disagree with the components of what the Trump administration is doing here, but that's the driving force. Well, that's the leitmotif behind all of it.
As a citizen, it's either exciting or scary or both, right? You do want to be strong if we need to be in a wartime footing. So you hope somebody's thinking about this stuff when we're not. As an investor, Terry, I got to ask a question that Katie posed earlier, and I think it's the most important one. Who's next, right? I mean, what other companies would greatly benefit from the federal government taking a capital stake, and can we get ahead of that deal and kind of ride the same boat with that kind of money?
Well, I'll tell you, Matt, I'm going to defer on specific companies because that's not I'm not a fundamental analyst. But what I can tell you and what I will tell you is that it's very easy. I've been saying this for over a year. It's very easy to take a through line from the defense industrial base, what we do well, what we've got in the country, what we don't do well, what's not in the country, and figure out the kind of the places where the United States government is going to pay attention to and what they're going to prioritize. That's not difficult at all. And it's way beyond. The reason why I call it defense industrial base is because, that's what Washington people call it, but it's way beyond core defense. And it touches things like chips. It touches all kinds of things. But the idea is, we've got to get the capacity to deal with this stuff and produce this stuff domestically. And as I say, I don't think the Trump people have been hiding this under a bushel at all. It's not been a secret. It's just markets aren't picking up on it.
Well, you think about it, we got Intel this week, the news of a potential stake. We know that the U.S. government has a golden share when it comes to U.S. steel. And then you think about the stake in MP Materials. It seems like, of course, national security. It's a broad church. You can fit a lot under there. But Terry, I also want to get your perspective on the meeting that's happening in Alaska today, that summit between President Trump and President Putin. This seems like the first step or one of the initial steps in what could be a very, very long process.
Yeah, I think it is a process. But of course, I wrote to markets yesterday, what this meeting is about today is about establishing a process. And I think markets react positively to that. Should it happen. By and large, because markets are now, I think, attuned to the idea that Trump likes to establish processes and then move forward on specifics. If you think about trade in that way, that's exactly what the bilateral trade deals and the negotiations are about. I give the meeting today a 60-40% chance of succeeding as a process establisher. Trump gave it 75-25, and he and I think. He's entitled to be a little more optimistic than I am because he knows a lot more about the specifics of the meeting. But he will show you, as did I, that there's a substantial potential downside here, too. So, markets will react positively, at least in the short term, not just on geopolitics, but more importantly on trade. Should they succeed, because they'll see greater likelihood of U.S.-China, U.S.-India deals being done. The converse is true should there be failure.
Terry, great to get some time with you. Really appreciate your insight, your foresight. Pangaea Policy founder Terry Haines. Now, President Trump is, as we've been talking about, heading to Alaska to meet with Russian President Vladimir Putin as the U.S. pushes further for peace in Ukraine.
I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
Natalie Drozdiak, Bloomberg U.S. National Security Intelligence reporter, joins us now. So, Natalia, what should we exactly expect in terms of deliverables, or is this just really kind of a feeling each other out meeting in Alaska?
Well, I mean, we've seen the president try to temper expectations for any sort of major settlement this week, especially since Ukrainians and the Europeans won't be at the table. But I do think there's a possibility of some sort of broad framework agreement that might be vague enough in terms of next steps for a ceasefire that maybe also might include some sort of reference to possible commercial ties and exploring those. We know the Russians are also open to discussing arms control. So there could be, I think in the best case scenario for Trump, there could be some sort of broad framework agreement that looks something similar along those lines.
All right, Natalia, appreciate your reporting. That is Natalia Drozdiak. She is Bloomberg U.S. National Security and Intelligence reporter. And don't miss our special coverage of the Trump-Putin summit on Balance of Power, kicking off at 5 p.m. Eastern. Joe Matthews steering that ship. Don't want to miss that. This is Bloomberg.
All right, we're almost an hour into the session. Let's get a check right now on the S&P 500 and look a little bit into the index. This is the move screen. You can see that we started out stronger than we're looking right now. We've come down throughout the last hour of the session. Breadth is also bad, right? 178 stocks are gaining, 324 are losing. In terms of the winners and losers, we got some big percentage jumpers, right? United Health Group up 12% after not only Berkshire Hathaway, but also Appaloosa have taken a stake, according to their 13Fs, a total stake of 7.3 million shares among them. And then Applied Materials, the second biggest loser here in terms of point reductions, but it's down 12% after a weak forecast yesterday. So those are the two big, barbell weights on the index right now. Healthcare helping us to gain a little bit, and chips pulling us down. Katie?
All right. Yeah, it's interesting to see the makeup of this market, and interesting to see just a quiet day. Of course, a lot can change between now and 4 p.m., but we know certainly it's been a good week for the S&P 500, so maybe investors just taking a little bit of a summer Friday. But coming up, we're going back to luxury cars for Matt Miller. We'll be speaking with the CEO of Lamborghini, joining us live from Monterey Car Week next. This is Open Interest.
With the agreement between UK and US, I feel we are in a very good position. We have approximately 7.5% higher tariff than it was before. So we don't expect that has a big impact on our business.
That was Bentley CEO Frank-Steffen Walliser speaking to us earlier about the benefits of the certainty that they now have with the UK-US trade deal under President Trump. Let's get back to Monterey Car Week. We're going to go back to the Quail. We are now joined by Lamborghini CEO Stephan Winkelmann. And Stephan, first of all, great to see you. Really excited about the new products that you have to show this weekend and that you have for customers to buy. But I first want to ask you about the business side of it. You have the same certainty now at a slightly higher level, right? 15%. But you have the same problem that Frank-Steffen Walliser has. You can't make Lamborghinis anywhere else. They have to be built in Santa Agata in Italy. And that's part of the reason people buy them, right? So are you going to have to raise prices?
Well, we have not the tariffs at 15% right now, but they are 27.5%. For sure, we hope that they're going down to 15. That would be a solution which we can live with, but we are for free trade, so the best would be not to have tariffs at all around the globe. Yes, we are increasing the prices a bit for all the lineup, but we are taking the bigger share of it.
Has it had... Okay, so now you're at 27.5. The target is 15. I get that. Has it had the price increases that you've pushed through any effect on demand? Because at the same time as you're pushing through these price increases, we have all-time record highs in the U.S. stock market. The rest of the world is doing even better than the U.S. in terms of risk assets. Bitcoin is trading, I think it hit $125,000 or thereabouts a couple days ago. So are you having any problem with demand?
But one of the things which for sure is impacting business is uncertainty. So we need to have a certain idea of what is going to happen, and then it will be, let's say, a calmer situation. For sure there is a V effect because people are not knowing what is going to happen, so they wait. But for the moment, together with our partners, the dealers, we have had some delays, but we think that we will be back on track in the next months.
You've got a lot of new product out and a little bit of a pivot for the typical Lamborghini, right? We're used to these fire-breathing, naturally aspirated 12-cylinder motors, and you still have that, but they're now paired with electric drivetrains, so hybrids in the Ritholtz, in the Temerario, in the Urus. How are customers reacting to the hybridization of Lamborghinis?
But you know, we always said we don't need to be the first one to do the things when it comes to the hybridization, but when we get there, we have to be the best ones, and the market has to be ready. Now, all the lineup is hybridized, and our customers are not only accepting it in a very positive way, but we also have a very solid order bank, which is exceeding 1 year for the lineup. So we are very happy about this. And this is a phenomenon which we observe worldwide.
We're looking at video here of the Ritholtz, and that's obviously the one I want for my forever car. But for my daily driver, I really am starting to fall in love with the Temerario or Temerario. I'm not sure how you pronounce it when you're in Italy. But it's a change from the Huracan, right? Because it's down from a V10 to a V8 and, you know, turbos and hybrids, and the look is also a little bit softer. I think Hannah, my friend Hannah Elliott, would say a little more elegant. How are customers reacting to this new vehicle, and when are deliveries going to start happening? When can I get behind the wheel?
So the name is Temerario. No, it's the name of a fighting bull. We are going to start delivering the cars in the US by the end of this year as demo cars, and then in the first quarter of 2026 we will have the first customer cars. The car so far, without being test driven by our customers, is already sold out for the next 12 months, so this is a very good sign. And it's a V8 biturbo engine, and it's a very incredible engine because it revs up to 10,000 RPM. So this is something which is also for an environment we are in the super sports car business unique, and this is something which the press and for sure also Hannah Elliott was appreciating a lot when we met back some weeks ago in Estoril in Portugal.
That's right. Hannah's driven it and I haven't, but I'm glad at least one of us has, because she can talk about it on our podcast on Hot Pursuit. One of the most fun cars I've ever driven in my entire life was the Hurricane Sterrato. So that was the predecessor to the Temerario, but it had a 2-inch lift, off-road wheels, and just an absolute blast to drive. Are any of these other cars going to get the Sterrato treatment? Would you envision, for example, a Temerario Sterrato?
But you know, we are, let's say, starting the new era with all the cars and the lineup completely new. So we will have a clear derivative strategy, but it's a bit too early now to speak about a possible Sterrato. There are others which are in front of this type of car. So there will be open versions, faster versions, and then we will see what we are going to do if we are going to do a Sterrato. But as I said, we have a lot in our pipeline in terms of derivatization.
What about a smaller Urus? Porsche has, the Cayenne, and then they've come out with the Macan. I'm seeing a lot more of those on the road. And there is still demand for, I guess, a four-door sedan if it's lifted, a compact SUV. Is there room for another vehicle in the Lamborghini lineup?
So when we looked into the lineup of Lamborghini and of the super sports car business in general, two supercars are enough, and one SUV is very well fitting to Lamborghini, because in the past we already had one. And what is missing is a Gran Turismo, so a GT car. And this is what we're going to do. So it will be a two-door, 2+2 seater, and this is going to be our model number 4.
All right. I am always probing you for future product news, and you're very good at holding it back, but I'm glad you at least let that go, that there's going to be a 2+2, a GT out of Lamborghini. Very much looking forward to that, and the Lanzador as well. Stephan, thanks very much. Have a fantastic car week. Stephan Winkelmann there, the CEO of Lamborghini at Monterey. You heard me mention Hannah Elliott, and Stephan mentioned Hannah as well. She is, of course, the Bloomberg Pursuits, our luxury reporter out of LA, and she's the co-host of my podcast.
You have a podcast?
Yeah, it's called Hot Pursuit with Hannah Elliott.
Wow.
It's our bi-coastal podcast for car lovers. And I just hope that viewers here who care about cars, and a lot of people in financial markets, a lot of people in global Wall Street do like cars.
They do.
And cars are global trade, right?
That's true.
Just go ahead and check out our podcast. Go to Apple Podcasts, go to Spotify, go to Bloomberg.com, or wherever you get
your
podcasts.
I feel like I need to mention that I also have a podcast. We've talked about Matt's
Everyone
a lot
knows about yours.
on this show. My podcast, it's called Money Stuff. I host it with a man named Matt, not Matt Miller, Matt Levine. You can also check that out wherever you get your podcasts. A new episode actually just dropped today, a mailbag episode where Matt and I answer audience questions.
Oh, that's
very cool. It was actually super fun. So go find that podcast as well. Let's check on these markets, though, shall we?
Let's do it. We saw kind of a downtrend in the indexes, the S&P 500, which opened higher, heading lower now, 0.2% at 64.55. Remember, we closed yesterday at 64.68. Katie and I were both there at the close with you. So that was an all-time record high, meaning, we're coming off of such lofty levels that it's probably not bumming you out too much. NASDAQ 100 down 1/3%. Bank of America out with a note saying maybe buy the rumor, sell the news on this Fed cut, and people are going to be taking profits.
Michael Hartnett, always out with bangers. Let's also take a look at shares of United Health. We've been following this story all morning. Warren Buffett's Berkshire Hathaway taking a $1.6 billion stake in the health insurer. You also had David Tepper's Appaloosa investing as well. Let's break it down with Alex Rajbandari. He covers Buffett and Berkshire for Bloomberg. So some really interesting nuggets from that 13F forum that we got from Berkshire Hathaway last night, tweaking their home builder allocations as well. But the United Health stake, that was new, correct?
That was completely new. And it's actually kind of interesting. So it's surprising because Buffett has remained on the P&C side of the insurance business for the longest time. So that's kind of a surprise for everyone. And, the last time he kind of had a venture in the healthcare business, he was with JP Morgan and Amazon. They had this joint venture that eventually shut down a couple of years ago. So very surprising. However, it is still... it's kind of a compounder bet and a classical one. United Health has been under pressure for some months after, the assassination of one of the executives in New York and some outlooks that were downgraded recently and the DOJ probe. So there's some gains to get over there. And I was talking to an analyst, to a shareholder this morning, who was telling me, that's kind of a classic Buffett bet. It's going to take a few quarters, even years to get back to where it should be. And that's what, his playbook is.
But it's not just Buffett, right? Do you think these guys play pickleball or whatever, or Warren has David Tepper over for dinner and they're like, hey, United Health has fallen like 45%. Should we buy that? Because Appaloosa got in on it too.
Right, it's true. There was a lot of speculation online, on social media in recent days that with 13Fs coming, there would be some moves on this. So I guess, I'm not sure whether they have some dinner together. I would love to be there, of course. But I think there was broad speculation that, because of all the troubles and the crisis that United Health was facing, there was a game to play over there.
All right, Alex, great having you on. There's so much going on with Buffett and with Berkshire, obviously with Lennar stake as well, and a Nucor stake as well. And you can go through the 13 Fs on the Bloomberg, or you can read Alex's reporting as well. Coming up, Intel intrigue, details ahead on President Trump's plan for America's chip future. Really, it seems for national security, if you buy that line into it, and using some help from President Biden's CHIPS Act. This is Open Interest.
It's time now for our Wall Street Week conversation. And beyond personal liberty, the rule of law helps drive the economy, giving innovators stability and investors confidence. David Weston dives into how rules matter for markets.
Often we talk about things like the rule of law when we're concerned about personal liberties, like birthright citizenship. But for Dean, we need to make every bit as sure that everyone plays by the rules when it comes to markets and to business.
The rule of law is important to personal liberty, but it's also fundamentally important to our economic well-being. That it's the rule of law that provides predictability, that provides stability, such that we're actively participants in our own economy. Why would Steve Jobs want to develop the iPhone and all of the technology and the intellectual capital that went into that technology? It's not just for the glory of having done it. He's intending to capitalize on his intellectual capital, his intellectual property. It's the rule of law that allows that predictability. It assures him that his intellectual capital, his intellectual property, can't simply be stolen and compromised by somebody else, that he will get the benefit of it. And that brings about innovation. That brings about development of greater intellectual capital. And I think that's very important to understanding what the rule of law brings to our society.
After practicing law in Washington at Wilmer, Cutler & Pickering, he and I were partners there back in the 1980s. Doug Melliman went on to head the antitrust division of the Justice Department, and then to serve as general counsel for Intel.
Shortly after I got to Intel, we were having an annual gathering of the worldwide corporate affairs folks. And I was going to do an interview with one of the most senior officers in the company. And I said to him, give me a couple of ideas of times where the government affairs people have saved your bacon, and maybe a couple of things you would like from them going forward in the near future. And his answer to me was, look, as far as I'm concerned, it's your job, meaning the general counsel, it's your job to tell me what the rules are, and it's my job to optimize within them. They want to know what the rules are. They need predictability. They need a sense of fairness, that the rules are going to be applied in a predictable way to everybody, and then they can carry on their business.
How do we get to that level of sufficient predictability through the rule of law?
You have a rule of law or the absence of the rule of law. It's a continuum. And no society, I imagine, is going to have a flawless rule of law that sort of checks all the boxes all the time. There's only one alternative to the rule of law. And that's might makes right. Because either you have rules that constrain the exercise of power by the powerful, or the powerful are going to make the rules and they're going to run society.
And that was David Weston on the rule of law. Now, up next on Open Interest, President Trump could tap CHIPS Act funds for the U.S. stake in Intel that's being discussed. More on that with our economic statecraft reporter Joe Doe up next. This is Bloomberg.
All right, checking in on Intel shares as the Trump administration considers using CHIPS Act money to fund a possible stake in the company. That's what people familiar with the situation tell us. It has not been confirmed, has not been verified by the White House. We do see a gain in these shares, and I think it's an absolutely fascinating story. We have Bloomberg's economic statecraft reporter, Joe Doe, here with us on set. And Joe, when I first heard this story, Katie and I yesterday were on the close when it broke, and I thought immediately about sort of the central planning aspect that this administration seems to be leaning into, right? Bigger federal government reaching into all aspects of American life. Then I thought about the Obama administration. They took a ton of stakes in companies after the great financial crisis. But Michael Ball of the Bloomberg MLive team writes, this is all about national security. And it's all about, when coupled with pressuring the Fed on interest rates and the CapEx aspects of 1B3, helping us to be secure when we need to be on a wartime footing without worrying about supply chain vulnerability. Do you agree?
Yeah. I mean, I've been saying since Donald Trump was reelected, internally, the lens through which the administration and Trump are going to be looking at everything, just anything, is through the lens of national security. Everybody you talk to, especially at this point, whether they're investors or they're longtime diplomats or analysts of any sort around statecraft, if you will, have said, we have entered a period where everything is national security. And I spoke to one person at the Peterson Institute earlier this week who we quoted in a separate story about the AMD and NVIDIA revenue streams, said, you know, we have a new definition of national security, which is basically anything that is related to China or tariffs or otherwise falls under that umbrella.
But that's the thing. I struggle to see how taking a slice of revenues from NVIDIA, from AMD, is national security. Because, okay, if you're controlling exports, limiting exports, it could fall into that definition. I feel like that gets harder when you're talking about just basically revenue sharing.
Well, are we willing to sell some national security? Like, we don't need that much.
That's the worry. That's the worry. Yeah. That's the worry this week, right? Which is you have this announcement, which on its own is a story, but people around it are asking themselves, whoa, what does this actually mean? And the conversations I've had this week are, hey, listen, we're already hearing from clients who are asking us, is this something we have to worry about? Like one of the hypotheticals that was brought up to me was, does this mean that if you're going to take trade meetings within any of the agencies in the United States government, that maybe you have to pay a fee to get that meeting? Beyond that, what about prime contractors for the Defense Department who are used to bidding processes with the Pentagon? Do they suddenly have to ask the question of, is there a new pay-to-play element here? And I think this week has really put a spotlight on that question. I don't think it had really been thought of in an extreme way of pay-to-play being a possibility in the United States federal government, but with the AMD announcement, the AMD NVIDIA announcement, that has really, in some ways, turned the tide here. And then we haven't even gotten into, now the government is apparently considering an investment stake in Intel, and already has done so in MP Materials through the Defense Department.
I just want to, so Mike Allen over at Axios has just put out a story this morning saying that the West Wing has created a scorecard rating 533 companies and trade associations on how hard they work to support and promote President Trump's 1B3. So essentially giving companies a loyalty rating, which kind of ties in there, right?
Well, this is something that we've been talking about that clearly, I mean, you have to imagine if you're the CEO of a company that your relationship with the White House always matters. But in this administration specifically, that seems to be more urgent. You think about all the examples of the different tech companies, Apple, for example, with Tim Cook, NVIDIA with Jensen Huang. It just seems like this is an administration where you need to have that line of communication.
You guys have done this for a long time. You know, a typical way that industry deals with the White House or administrations typically is you have your industry association go and have the conversations with the expert matter level people, and then that kind of filters up. What we see now are exactly like the trade negotiations, bilateral conversations. Apparently Donald Trump speaking to the CEO of X, enter the name of the company, and having a conversation that in some cases turns out to be a new policy. Years from now, I mean, I don't know if this will set a precedent, but years from now, these are the kind of conversations that will really be highlighted. That you had a president of the United States having a one-to-one conversation with CEOs of corporations, private companies, and saying, let's strike a deal with the federal government.
It's definitely a fascinating time to be in economic statecraft reporter, Joe, and a very, very busy job, I'm sure it is. Bloomberg's Joe Doe there. You can follow his work on Bloomberg.com or even better on the terminal. Coming up Monday, Joanne Feeney of Advisors Capital joins us. Texas real estate billionaire Ari Rastegar comes back to the show, and we'll talk retail with Joe Feldman of the Telsey Advisory Group.
This is Bloomberg Open Interest.